Welcome back to Explain the Charts, your ultimate guide to deciphering market movements. Today, July 24th, 2025, we're zooming in on the S&P 500 ETF, SPY, which has been making headlines with its incredible performance. Just yesterday, July 23rd, the S&P 500 hit its 12th record close of the year, soaring to 6,358.91. This impressive surge is largely attributed to renewed trade deal optimism, propelling the broad market upwards despite some mixed corporate earnings. For instance, while Google's strong performance continues to fuel the AI rally and lift the Nasdaq, we've seen some disappointment from giants like Tesla and IBM. Now, let's turn our attention to the charts to see how these events translate into price action. Looking at the daily chart, we can clearly see the powerful long-term uptrend that has dominated the S&P 500 throughout 2024 and into 2025. This consistent climb reflects strong underlying market confidence and robust economic conditions that support higher equity valuations. However, this journey hasn't been without its dramatic moments. Let's specifically narrow in on the period between April 3rd and April 9th, 2025. Here, we witnessed a sharp and swift pullback, with SPY plummeting from around 564 down to an intraday low of 481.8 on April 7th. This represented a significant correction, highlighting the market's vulnerability even amidst a larger bullish trend. Interestingly, the market experienced a V-shaped recovery, bouncing back rapidly to 548.62 by April 9th, demonstrating remarkable resilience and dip-buying interest. Returning to the full daily chart, we can observe that after that dramatic April dip, SPY found strong support in the 520 to 530 range, establishing a new higher low. This level, particularly around 520, appears to be a critical support zone should any future pullbacks occur. The price then resumed its upward trajectory, showing consistent higher highs and higher lows, a classic sign of a healthy uptrend. Current resistance is, of course, the new all-time high set yesterday at 634.21. Surpassing this level opens the door to psychological targets like 635, 640, and even 650 in the short to medium term. Now, let's transition to the 1-hour chart to get a closer look at the recent price action leading up to these record highs. Focusing on the first half of July, we can see how SPY was consolidating and building momentum. The price hovered mainly between 620 and 625, indicating a period of accumulation or indecision before the next major move. A key resistance level on this time frame was around 626 to 627, which was tested multiple times before being decisively broken. This breakout on the hourly chart provided a clear signal for the subsequent push to new all-time highs on the daily chart. It shows how smaller time frames often give early indications of larger trend continuations. Finally, let's examine the 15-minute chart, covering the most recent days, specifically July 21st to July 23rd. This granular view precisely captures the recent record-breaking move. Notice how on July 21st and 22nd, SPY traded in a relatively tight range, mostly between 628 and 629. Then, on July 23rd, coinciding with the news of trade optimism, we see a powerful surge. The price broke out sharply, pushing from approximately 630 to reach the new all-time high of 634.21. This rapid ascent, backed by significant volume, confirms the market's enthusiasm. However, following this peak, there's been some slight pullback and consolidation around 633 to 634, suggesting a potential for short-term profit-taking or a retest of newly established support levels. So, what does all this mean for traders and investors? From a bullish perspective, the overall trend is undeniably strong, characterized by higher highs and higher lows on the daily chart. The recent breakout to new all-time highs indicates robust momentum, and positive catalysts like trade deal optimism could continue to propel SPY higher. On the flip side, Reasons to be bearish include the overvalued assessment from Guru Focus, which suggests lower future returns if the price remains significantly above its intrinsic value. Furthermore, mixed big tech earnings and the Wall Streetization of Bitcoin with increased VIX correlation could signal heightened overall market volatility and potential for sharp pullbacks. The dramatic April 2025 correction serves as a reminder that even strong uptrends can experience significant reversals. In the short term, if SPY can hold above the 630 level, especially the prior daily close, we could see another push towards 635 and 640. However, a break below 629 to 630 could signal short-term profit-taking, with potential support at the 626 to 627 range. For long-term investors, the primary trend remains bullish, but careful consideration of valuation metrics and global macroeconomic factors is crucial. Looking ahead, upcoming earnings reports from remaining tech giants will be critical. Any unexpected shifts in economic data, such as inflation figures or employment reports, could also impact market sentiment. Federal Reserve commentary on interest rates and any new geopolitical developments should also be closely monitored. To recap, the important price levels to watch are the all-time high of 634.21 as immediate resistance. Key short-term support is around 629 to 630, followed by the stronger 626 to 627 area, which was a previous resistance now turned support. For a more substantial pullback, look for support closer to the 590 to 600 psychological zone on the daily chart. Our unbiased prediction: a continued push towards 635 to 640 in the short term seems moderately likely, perhaps 60% chance, provided no significant negative news emerges and trade optimism persists. A healthy short-term pullback to 626 to 630 is also a reasonable possibility, around 30% likelihood, as profit-takers step in after the recent rally. A major correction, similar to April 2025, appears less likely in the immediate future, perhaps a 10% chance, unless there's an unforeseen macro shock. Conditions reinforcing further upside include consistently positive corporate earnings, favorable economic data, and continued global trade stability. Conversely, unexpected inflation, hawkish Fed signals, or geopolitical tensions could trigger a deeper correction. Always pay attention to volume. Higher volume on breakouts confirms strength, while declining volume on rallies could signal exhaustion. Thank you for joining Explain the Charts today for this deep dive into SPY. We'll keep monitoring these levels for you.